Good afternoon everyone. Welcome to this session on dollar INR. Today we are not going to talk about what direction the currency is going. Today we are going to talk about something more strategic, something more critical. The question that should we hedge or not hedge. You know, looking at the market volatility, the dollar INR volatility in the last 10-12 months, a lot of companies have come to me asking various kinds of questions whether to hedge or not to hedge. And I want to show some historical facts here for a research that we have been doing for some time, and I want to show you the facts and figures of that historical research. But before we come to that research, I want to give you a slight bit of an understanding of what methodology we followed in conducting that research. Okay, so let's have a look. So what did we do? What are we trying to analyze and what did we do? We were looking at the dollar INR spot and the forward premiums for the last 25 years. Okay, so it is an analysis of the last 25 years. And what are we doing? What did we do actually was on each working day, we took a forward for 3 months, 6 months and 12 months maturity. Okay, each working day for the last 25 years, we took a forward. And on each forward maturity, remember we took for 3, 6 and 12, and on each forward maturity after 3 months or after 6 months or after 12 months, we compared the forward rate with the spot at maturity. Okay, so the simple difference between the hedged rate that we get, which is the forward rate, compared to the unhedged rate or the spot at maturity, the rate what we would have gotten if we would have not hedged. Okay, so that difference, the difference between the forward rate and the spot at maturity is what we call the word carry. We call it carry. That is what I have highlighted here, the word carry. Okay, so this analysis, if you introspect on it, you can find out that this analysis is comparing the dollar INR forward premium, because that is what I get if I take a forward rate, comparing dollar INR forward premium with the natural weakening of the rupee. Okay, so let us get into the facts and try and understand how the markets have been behaving. Okay, so let me just get to you the facts here. So these are the facts. I will explain the columns one by one. Okay, so this is 3 months, 6 months, 12 months, and there are various buckets. Okay, the first bucket that we have taken is the first 10 years from 2000 to 2010. The second bucket is from 2011 to 2020. The third bucket is from 2021 to the current time, and the last bucket is the entire 25 years. Okay, so we are looking at 4 buckets here. So the first bucket between 2000 to 2010, if you look at these charts, I will explain the table one by one. Okay, so here this part shows, this column, the first column shows what is the change in the rupee or what is the natural weakness of the rupee in this 10 years, in this 10 years and in this 10 years. Okay, and the second column is what is the average forward premium for those maturities, whether it is 3 months, whether it is 6 months or whether it is 12 months. Okay, so this is the premium, this is the rupee change or rupee weakening, and the difference of these two is what we call as the carry. Okay, so if you look at this 10-year period, this 10-year period, the carry is all positive. Okay, now what does that mean? What it means that the forward premiums have been higher than the actual rupee weakening. The carry is positive, even though if you see the carry has reduced quite a bit. Earlier it was around 2.5% in the first 10 years, 2000 to 2010, and in the next 10 years it has been just around 0.5% to 1%. Okay, but still positive carry, meaning that the forward premiums have been higher than the natural rupee weakening. Okay, now the real interesting part is this period, which is from 2021 to the current period. You know, I will come to this short term to medium term period again, but let me look at it here. in this period the carry has actually become negative. What does that indicate? That indicates that the forward premiums have been lower than the rupee weakening. Rupee has weakened more than the forward premiums. Okay. So what we have seen in this and this period, 10 years here, 20 years, the last 5 years the thing has been reversed. Earlier the forward premiums were more, rupee weakening was less, but in this period, in the last 5-6 years, the reverse has happened. The rupee weakening has been more and the forward premiums have been far lower. Okay. Let me come to the other part as well. Okay. So here I am showing different buckets and I am trying to show what has happened in the last 5-6 years. Okay. This is the period from 2020 till now, 2021 till now, 22, 23 and 24, all from those periods till now. Okay. So this is a more recent analysis, last 2 years, last 3 years, last 4 years, last 5 years, something like that. Okay. Here if you see, all the carry has become negative. Okay. All the carry has become negative, which means historically long term if you see, the forward premiums have been more than the rupee weakening, but the recent past if you see, the last 4, 5, 6 years, the rupee weakening has been far more than the forward premiums. Okay. So what does this lead to hedging or risk management strategies for exporters or importers? See, historically exporters have been more incentivized to sell, forward sell, because premiums were more than the rupee weakening, and importers were vice versa, they were not doing it. But now, since these dynamics have dramatically changed in the last 6-7 years, 5-6 years, where the rupee weakening has been larger or higher than the forward premiums, now the exporters are disincentivized to forward sell and importers are incentivized to hedge their payables because the premium cost is lower and the rupee weakening is higher. Okay. So hedging strategy has dramatically changed, or at least the ideology behind the hedging strategy, the logic behind the hedging strategy has dramatically changed in the last 5-6 years, and all of you exporters and importers should look to modify and adjust your risk management policy as well as your strategy in line with the recent changes which we have seen in the last 5-6 years. So that's it from my side. For more such research on the Indian forex markets, please join our WhatsApp community.